I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is June 7th.
And today we're going to talk about mortgage rates. Where are they today? You know, some of the big events next week are going to be the inflation report, and the feds are going to meet. They're going to talk about that Fed funds rate. What are the home rental rates doing in the greater Phoenix area? How many homes are selling over list price versus under list price? Foreclosures. Are foreclosures going up or are they going down? And what cities in Phoenix are buyers markets versus sellers markets? So let's get into it.
Remember, this is for informational purposes only. This is not financial advice. And if you like what we're doing here, be sure to subscribe, comment, and like. Give us a call. We'll be happy to go over your loan scenario if you have anything for us. And right off the bat, where are mortgage rates today? This is from the Mortgage News Daily. It's a survey of most of the banks out there, what's being quoted. And we're seeing the 30-year fix at 6.89%, the 15-year fix at 6.29.
And the FHA and VA are very, very close. FHA is 6.54 versus VA at 6.55. They always are very close.
And remember, this is a survey, basically an average of all these banks out there. And Tom and I, we're right here in Phoenix. Most of our business is right here in Maricopa County. And as brokers, we have very competitive rates. So we really do pride ourselves in lower rates than the national average.
Yeah, and we publish these because we figure this is the best baseline to use, even though these are not our rates, and our rates are going to be lower than this. But this is what people are seeing and reading when they open the newspaper or going online. So this is a baseline we like to use every podcast.
So next week, June 13th, it's the big inflation report. And it'll be early in the morning. Arizona time, it's going to be 5:30 in the morning. The forecast is 4.7%, for the inflation number. Last month, it was 4.9%. So again, the forecast is 4.7. And depending on if that number is higher or lower, the mortgage rates themselves will be affected for sure.
Right. So as long as, the rate comes down, does it have to come down by that 0.2? Probably does, but it'd be great if it came down like a point, lower. But yes, we're hoping for it to come down just ever so slightly.
So if the inflation rate numbers comes down lower, we will see mortgage interest rates come down as well.
Yeah, and if it stays what it was, it's not terrible. At least it's not going up, but it's not hitting that lower number that they're expecting.
Absolutely. And then the following day is the big Fed meeting, and that's Jerome Powell giving his talk on June 14th. And right now the question is there going to be a Fed rate increase? Are they going to decrease it? Are they going to do nothing? And here's an interesting look at from last week's, this is the report we did last week, showing there was a 64% chance that there was going to be no increase. Today, there is a 79% chance there will be no increase. Last week, there was a 35% chance there would be a 0.25% increase. And this week, 20% chance. So it looks like we're really leaning towards a no increase on the Fed rate as of now. This number does change quite a bit, though.
And what's interesting, hopefully this isn't too much, but basically if the Feds do increase and they do fall into that 20% bucket, the mortgage rates and the bond will be affected by that 20% number. Let's say that 20% number was the 80% number and it was reversed. If someone was like, oh no, they'll never go up. And if they go up, that's when you see a really big impact. So the fact that they are, am I saying that right?
Yeah, because if the market's expecting, like only 20% of the futures traders are expecting it to go up a quarter. So it'll be a big surprise. And whenever it's a surprise in the market,
that's what I wanted to say. So it is actually, I was a little bit opposite there. So because it is 20, that means it'd have to make up that 80% delta where 80% were caught off guard. So that's something really important to look at. 80% of the market thinks it's going to stay. 20% thinks it's going to go up. So if it does go up, there's going to be an impact from the 80% who were caught off guard.
Yes, definitely. In the Phoenix, again, this is from the Cromford report. This is the median housing sales price numbers coming in at 443,000. That continues to climb from the January 2023 low. Again, we're at a 443. This is really for the entire Maricopa County. Just want to always keep you guys updated on that number.
Yeah, I'm always baffled. I mean, we want home prices to go up, but I'm just amazing how they just continue to kind of inch up.
And I think this has a lot to do with it. It's just the active listings. And we've talked about this week after week, but that the listings numbers are continuing to come down. Fewer sellers are putting their homes on the market, and there's basically more buyers chasing those sellers and causing those prices to go up. There was Anyway.
Yeah. And why aren't sellers putting their home on the market? Because the interest rates are higher today. Why would you leave a lower rate to get into a slightly different home at a higher interest rate?
Yeah.
So it's a conundrum. That's part of me thinks that these higher interest rates are keeping these inventories low. And if they were to lower the rates, it might actually loosen things up.
Yeah, Tom and I have been talking about, if the rates got into the fives, we would probably see sellers put their houses on the market because then they would realize, you know what, now is probably a good time to trade, move. So if we do see lower rates, we could see higher inventory coming.
Yeah, so people aren't locked into their homes physically, they're locked into their homes financially. They just don't want to leave that lower rate.
So as long as rates are high, we probably will see a continuing downward slope on these active listings. Something that we want to show you too is the rental to lease rates are about $1.35 per square foot today. That's the average, and it's kind of been holding steady since about mid-2021. That means this. Today, a home that's 2,000 square feet would rent for about $2,700 in Maricopa County as an average. Back in 2016, that same house would rent for $1,600. And we have a lot of customers, family members, who's been out there renting has noticed this, but really the rental rates are holding strong and steady for the last couple of years.
What is that, about an 80% increase?
Yeah.
If it were 100% increase over 3,000.
Right.
But that's just amazing to think, only going back 7 years.
Yes.
80%.
So it's a massive
and they're having to
burden.
keep up. They're having to keep up with these mortgage rates because, again, people are still owning property. What does the property cost you? Well, it costs you property taxes, homeowners insurance, and whatever your interest rate is. So as these interest rates go up, those costs, like a tax, get passed on to the tenants.
Yeah.
So it's not a surprise.
It's a really good point. Yeah. Everything's being passed on to the tenants, and it's part of the inflation piece. Okay. So something also very good to see here is that the closed sales that have happened, especially this is updated June 6th here, but it's showing 39% of closed sales today have seller concessions. That is very much the average from 2015 to 2020.
Yeah, so a contract without a seller concession is you're selling your home for $450. The buyer says I'll pay you $450. A seller concession contract is I'll buy your home for $450, but give me $3,000, give me $4,000, give me $500, give me something. So we're saying 4 out of 10 contracts do have some type of concession.
Yes, and right now I don't have the slide here for this, but about the average concession that the seller is giving to a buyer is about $4,200 right now, and that's going towards a buyer's closing costs and their prepaid taxes and insurance. So again, it helps those buyers. And it shows whether or not how motivated those sellers are to sell. And right now they're kind of on pace for an average. This is nothing, 39% is nothing new. Been there before for many years. And something really interesting is that 20% of homes today are selling above list price. You see this dotted line here. It's the average, that the 20% above, 20% of homes selling above list price is really above the 2014 to 2020 era.
Yeah, amazing.
So the market is very, very strong, or continuing to be strong for buyers. Buyers are out there obviously pushing up these prices.
Yeah, and it's frankly a great market for the sellers. I mean, if you're putting your house on the market, there's a decent chance that you're going to get over asking price, which is still just a head scratcher. It's just unbelievable. But again, it goes back to that, depressed inventory level. What homes are available out there, people are jumping on them.
Yeah. So yeah, if you're a seller, you list your house right at the market value, 20% chance you'll get a higher offer. All right. And a lot of people have been wondering what the foreclosure status is here in the greater Phoenix area. And again, a lot of news pieces have been talking about the rise of foreclosures or a crash in the real estate market. In order for that to happen, we have to see homeowners stop, basically stopping their mortgage payments. And then first place we look at are notices. Notices are given to homeowners after they have been late on their mortgage 90 days. So it is a lag. It's about 90-day lag. But right now we are well below the average notice of trustee sales, to homeowners.
And I'll say this, I think, the trustee sales foreclosures, that's one of those, headline pieces that writers like to talk about, but we're just not seeing much of it.
Yeah.
And this is proof. And the reason why we're not seeing much of it is because if you don't make your mortgage payment and you do leave your home, where are you going to go?
Go back to the rents. That
Go back to the rents. I mean, in a normal market, where there are depressed, well, I shouldn't say normal market, but when there's a decent market with enough home inventory where prices aren't being elevated and borrowers aren't paying more than asking price, you might have an option to get something for a little bit cheaper. But right now, the best bet is stay in that home. And again, those interest rates, you're financially locked into your home. Why would you leave it? So this is no surprise, but don't let people scare you about, things rising. This is the proof.
Yeah. And to your point, in 2008 through 2010, your home was probably undervalued. You could leave that house. You could go rent another home equivalent to your house, and the rent was probably cheaper.
Yeah.
The average interest rate back in this era here in 2008 to 2010 was about 6.5%. So very different today. All right. So the Cromford report has this cool market index, 17 most populous cities here in Phoenix. And you can see here in green, the greens are where the market index is above 100, which means it's a seller's market. There are more buyers in these cities chasing sellers. There's more buyers than sellers in these markets.
Right.
And the only city that's really in yellow, which is really a buyer's market technically.
Yeah, and it's barely. Look at that, 92.9. So we could probably color this all green.
Yeah, it's pretty balanced. But yeah, Buckeye, because last week Maricopa was below 100. It's above now 100. So everything's moving into really that seller's market. And we'll see how the rest of the summer continues to go with this. And so, we're going to keep an eye on that. And then here's the heat map. We've showed this contract ratio heat map. There are a couple of zip codes here that have really become, what I'm trying to say, very, very hot.
Very, very hot. Yeah. And going off of that last slide we had, seller's markets versus buyer's market, look at these, especially focusing on the yellow. You've got 2 in Chandler, 1 in Mesa, and 4 in Phoenix. We call this the heat map. We can also call this the activity map. Where are most of the buyers? And how are we ranking these? This is really, really hard to understand. But if you look up on that little key,
the contract ratio, right?
Yep, the contract ratio. So you see that 2 to 400. That's the yellow that we have right now. And what that means is basically there are 2 to 4 homes under contract for every one active listing, which is amazing. So the way you understand that is if you have 5 homes on your street that are being sold, 2 to 4 of those are going to be under contract.
Yeah, like 5 for sale signs on your street. 4 of them will be under contract in these zip codes right here.
In these zip codes. And again, Phoenix, and we were trying to identify some of these areas, but you've got, I won't even point them out, but you can see them. There are hot markets, and this is not coming from us. This is from Cromford. They call it insane.
Yeah.
To me, that doesn't sound like an overly, technical term.
Right.
Chandler insane.
And Chandler's been hot for a while. Mesa has too. And these zip codes, here in Chandler and Mesa have been good. But just this week, it seems like these 4 zip codes in Phoenix have really popped up. A lot of buyer activity in these zip codes here. You can see them very, very central near the airport, near the I-10, probably around the Grand Canyon University area, but just very interesting to see where that buyer activity is.
Yeah.
And if you like what we're doing here at the Mortgage Brothers team, be sure to subscribe, comment, and like. Be sure to call us, email us with any of your questions. We'll be happy to help you really go through your scenarios. We'll be happy to give you our undivided attention.
All right. And thanks for listening to us.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.